Welcome to Cleverchesstrading. In this video I'm going to show you the benefits of this Rook army with very high time frames alignments to make swing trades using previous month liquidity. We already look at the hours, then we look at the minutes, and in the third video we look at the seconds time frames. It's all fractal, so we can also use this in the daily and in the weekly chart. Now in this video I'm going to show you the benefits of this in the daily, so make sure to keep up. A quick recap. In previous video I told you about this potential draw liquidity. Then price came here and make a market strategy lower. All was bearish at 29th of January. You see around 10 AM all was bearish. You can see we hit that liquidity and market strategy lower, and over here all these time frames were aligned. Very interesting. So then price took previous week low, you can see here in the circles. Then we came back quickly, very quickly, to the previous week 50%. Remember these lines, the shaded areas are previous week's levels. The open, previous week low, previous week highs. So what happens here is price failed to break about the 50% area. Is the shaded gray area, the 50% of previous week. This is what previous week low, previous week high. So what happened is very big drop because all was sink lower and we hit a previous, this is February, previous month low. Very interesting. If you analyze this, you can see we went from a previous month high over here to previous month low. Can put this at the beginning of February and this January to previous month low over here. Make this more clearer. Previous month done. This is previous December high. This was January. We took out previous month high, meaning December highs, and then we revert back to December lows. That it's perfect push and revert. So okay, now if we apply these algorithms to the daily chart, we get this. Remember, these are available for free in my trading account. Also I got the Pawn Algo that is very similar to this indicator that I used to plot the previous higher time frame levels. Here we got something very useful for swing trades. We got the 5, 4, 3, 2, 1 day time frame and the 6-hour time frame for the entries. So we can apply the same logic, but it requires more patience for the setup to play out. It takes around weeks or months. So we're going to use previous month highs and lows in the lower part, meaning the 6-hour, 1 day and 2 days. You can see we are referring the previous month highs and previous month lows here. You can see here it says 1 month, and over here we got the previous 3 month high and low. You can see here it says 3 months. That's it. So over here we got previous month 3 months high liquidity was sweep the bodies. Now we are very likely to sweep the bodies low. This is the potential future draw liquidity that I think price is going 24,144, and then potentially we can get over here to this imbalance. So how can we trade this? How can we swing trade using this information? Is this an idea? We have to align with the time. So this yellow line is what? It's the new year. We wait for price to reach previous month on previous quarter high, that is previous 3 month high. Over here in this case, over here previous month. And then what? We wait for the market strategy sell signal. You can see here, sell signal, market strategy 6 hour. Boom, confirm displacement in the 1 hour. Displacement in the 2 days. Sorry, here 1 day, today. And over here we are closing this in 1 hour. So we got all this time frame sync. So price is really bearish. So when is this in sync? You can see the 1 day and 2 day was bearish around here. On the 2nd of February we can just aim for the previous month low and potentially the quarter low. So in this time when the candle closes we can go into the 6-hour time frame and look for potential sell, meaning on this day around the open. I'm going to show you. Okay, this is the weekly. This is where I think may be going, but I want to show you the 6-hour over here. So as soon as Wednesday open up here, we can get into a short position. Open around 12. Say this close. Just want to get here, and we can put the stop loss, for example, over here around the midpoint. Price should not return there, and we can aim for that liquidity. This is a potential trade we could take. Then we manage it using the other time frames. 6 risk reward ratio. As you can see, if we use, for example, the 2 days, the daily for management, you can see we're in a very good position entering around the week using this logic. Okay, this is that I wanted to show you in this video. If you find this insightful, please subscribe and hit the like button. Thanks for watching. A little tip for those who stay to the last moment. I think we are really going to hit this. As you see, it's around the middle of June. Price is very likely to move quickly to here because we got relative equal lows. So, little gem for those who would want to learn this is the following. We can put a range here. Over here is discount, so this area is very likely draw, and let's mark it here. And if we do this, using for example the body is 50%, it's a very likely draw, equal lows over here. So that's the gem. See you in the next video.